Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 1 of Central Bank Digital Currencies, CBDCs, what they are and why they matter. Money has constantly evolved, from coins to paper bills, and now, digital currency is taking center stage. Central Bank Digital Currencies, CBDCs, are the next big step in how governments control and distribute money. These are digital forms of a nation's currency, issued and regulated by central banks. With more countries exploring this technology, CBDCs could reshape how we save, spend, and secure our financial systems. But what makes them different from regular digital payments, and what challenges do they bring? Let's break it all down. What are central bank digital currencies? Central bank digital currencies, CBDCs, are changing how we think about money. Unlike traditional cash or private cryptocurrencies, CBDCs are issued directly by central banks and serve as a digital version of a country's fiat currency. With increasing global interest, CBDCs could shape the future of financial systems and payments in surprising ways. Overview of CBDCs. CBDCs are often described as the digital twin of traditional currencies. Think of it as the electronic equivalent of the paper money in your wallet, but instead of being printed and distributed through banks, it's issued and managed entirely by a country's central authority. Importantly, CBDCs aren't just another form of cryptocurrency like Bitcoin or Ethereum. While cryptocurrencies operate on decentralized networks and are not tied to any government, CBDCs are centralized, government-backed, and pegged to the value of the nation's official currency. Why are countries exploring CBDCs? The goal is to modernize economies by streamlining payments, improving financial inclusion, and offering a secure alternative to the rise of unregulated digital currencies. For example, CBDCs could provide a faster and cheaper way to send money across borders or make everyday transactions more efficient. Central banks also see them as a way to maintain control over monetary policy as physical cash use declines globally. CBDCs have the potential to do what standard money does, be a store of value, a medium of exchange, and a unit of account, but in a wholly digital format. They combine the trust of fiat currency with the convenience of modern digital payment systems. Key features of CBDCs. CBDCs stand out because of their advanced and flexible features. Here's what makes them unique. Programmable money. With CBDCs, money could be programmed for specific purposes. Imagine receiving government aid, but it's automatically restricted to certain purchases like food or healthcare. This programmability could introduce new levels of transparency and precision to economic policies. Interoperability. CBDCs are being designed to work seamlessly across different platforms and countries. Whether you're using your smartphone for a local payment or sending money abroad, interoperability ensures compatibility with global payment systems. Traceability. Unlike cash, which is anonymous, CBDC transactions can be tracked by central authorities. While this helps reduce illegal activities like money laundering and tax evasion, it also raises valid concerns about privacy and surveillance. Secure digital transactions. Built on advanced encryption and blockchain or similar technologies, CBDCs aim to provide a highly secure way to transfer and store money digitally. These safeguards are critical to prevent fraud or cyber attacks while maintaining trust in the system. In short, the features of CBDCs could adapt money to meet the demands of a fast-evolving digital economy. However, this kind of technology also requires careful implementation to address privacy, security, and accessibility challenges. Different types of CBDCs. Central bank digital currencies, CBDCs, are not a one-size-fits-all concept. They come in various forms, depending on their purpose and who they're intended to serve. Broadly speaking, CBDCs fall into two main categories: retail and wholesale. Each type is designed to address specific needs and challenges within the financial system. Let's explore these two types to better understand how they work and why they matter. Retail CBDCs. Retail CBDCs are created with the everyday person in mind. They function as a digital version of cash, accessible to the public for daily use. Imagine it as the money you'd use to buy groceries or shop online, but instead of holding physical bills, it's stored digitally in your account or on your smartphone. Here's why retail CBDCs are important. A safe alternative to cash. While cash is reliable, it's slowly losing relevance in our increasingly digital world. Retail CBDCs offer a secure and government-backed alternative. Unlike private digital payment systems or cryptocurrencies, a retail CBDC eliminates risks like system outages or the volatility of unregulated crypto markets. Financial inclusion. Many people globally don't have access to traditional banking. Retail CBDCs could help bridge this gap by offering a simple, digital payment solution that doesn't require a bank account. You could store and use your money directly from a smartphone wallet, making financial services more inclusive. Convenience without the fees. Think about the fees often attached to credit card payments or third-party apps. A retail CBDC could eliminate these costs for consumers and businesses alike by being a no-middleman system. Retail CBDCs are designed to mimic the characteristics of cash: accessible, secure, and universally accepted. Their potential to make digital payments easier and safer is catching the attention of governments worldwide. Wholesale CBDCs. Unlike retail CBDCs, wholesale CBDCs aren't intended for the general public. They are aimed at financial institutions like banks and large corporations. Their primary role? To make interbank transactions faster, cheaper, and more efficient. Here's how wholesale CBDCs operate. Streamlined interbank payments. Today's banking system relies on intermediaries to send money between institutions, which can take time and rack up costs. Wholesale CBDCs can speed up this process by enabling direct, real-time settlements. Improved liquidity management. Wholesale CBDCs help banks better manage liquidity by giving them instant access to central bank funds. This can be especially useful during financial stress or crises. Lower risk, better security. By operating on secure and centralized digital platforms, wholesale CBDCs reduce settlement risks, a critical concern when transferring large sums of money. One way to think of wholesale CBDCs is like a high-speed rail system for banks, helping them move large sums of money quickly and securely. For example, in cross-border payments, wholesale CBDCs can simplify what is otherwise a complex process involving multiple currencies and clearing systems. By focusing on institutional-level transactions, wholesale CBDCs could transform the backbone of the global financial infrastructure, making it leaner and more efficient. In essence, while retail CBDCs aim to replace your pocket cash, wholesale CBDCs are more like an upgrade for the banking system's internal gears. Both play unique but complementary roles in the broader vision of digital currency advancements. Global landscape. Central banks exploring CBDCs. Central banks worldwide are racing to understand, develop, and implement central bank digital currencies, CBDCs. These digital currencies could redefine how money flows within and across economies, making the study and experimentation of CBDCs a high priority for nations eager to stay ahead in the financial sector. Let's take a closer look at the early adopters and those still exploring the potential of this groundbreaking technology. Pioneers in CBDC development. Some countries have already taken bold steps toward implementing CBDCs, testing their digital currencies in real-world settings. These early initiatives are shaping how others approach this new frontier. China. As one of the clear leaders, China has made significant progress with its digital Yuan or ECNY. This CBDC has already entered large-scale trial phases across major cities, covering millions of users. China has integrated the digital yuan with mobile payment platforms like Alipay and WeChat Pay, making it almost seamless for users to adopt. The country's primary goals include reducing reliance on physical cash, improving transaction efficiency, and even challenging the global dominance of the US dollar in cross-border trade. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.